Alright, so, today was actually a really interesting day, just in terms of all the little pieces that were going on. Before I delete this line, let's take a look at the Globex real quick. So, well, I'll just use the ES and show it. Trading range day on the open. So, anything, if you do something reasonable in a trading range, you'll probably make money. So, if you try and buy, here's my point. Trader who buys anywhere in this area, puts a stop down here, and puts a target right here will probably make money. As you can see, a trader who bought this low, maybe more halfway, maybe was going to buy more down here, target here, will probably make money. But they need the stop down here. That's why I know there's a few questions today about swing trading at the bottom of a trading range or scalping on the way down. And in terms of swing trading, you can buy here and buy down here, buy more lower here and make money. You can see, look right here, if a trader bought somewhere down here, quickly made money. Price came within a tick here. So I think price is going to touch this line right here. It'll close this gap, or you could make the argument it did right here. So I'm going to get rid of that. Alright, so before bar 1, there was one thing to think about. Consecutive buy climax, spiking channel, strong sell-off, may get a second leg down, possibly in the form of, here's a way you can tell. Trading range might be the middle of something. So, maybe this is the bottom of the spike, or maybe this is the middle, and here's the bottom, which we came close to. So, if we were to look real quick at a higher time frame, such as the 60-minute, here's the open of the day, spiking channel, obvious target, the bottom of the channel. So, sorry about that. Same thing here. A trader who sells this close, uses a wide stop, sells more below here, will make money. In fact, here's the midpoint. I don't want to get off on that. I'll go on forever about that if I keep talking about it. So, what's the very first, if you look at today, we'll zoom in. Bar 1 told us a lot. Trading range bar. Well, consecutive buy climaxes, big move through here, consecutive sell-off, consecutive sell climaxes. So what do you expect? You expect some sort of sideways price action for a little bit. What's a little bit? Probably 2 hours. That's usually the standard, if you will. So bar 1, probably buyers at this low. So what does that mean? That means at some point, price should do two things. It should fall below this line and get to the open of the day right here. So what's the advantage to knowing that? The advantage is not buying this low. You have the 60-minute moving average. Here's the issue with simply just buying the low. Well, where's your stop go? It's the same thing. I did not have time to make a video yesterday, but I'll talk about it real quick. Look at yesterday. Sideways for a couple hours. Tried to break below here. Turned up. So, open of the day. Trading range open for 10 bars or so. Failed breakout below here. Possibly the trading range. We're low in the range. So buying somewhere in here, even buying, think about this, think about the math here. Let's say you set a limit order to buy this low, and you're going to put a stop all the way down here. Well, the math's kind of tricky if you can't scale in, but I think it works. You buy here, price immediately starts to turn up, set a target at the open of the day. Or what do what's the other side of that? Buy somewhere in here, buy above here, betting price gets to here. Excuse me, gets there. It might even go from the low of the day to the open, projecting up, which it did. So, it's the same thing there. It's reasonable to bet the market will come back to the open, because it usually does on most days. Usually on most opens, just scroll through. Open of the day, we went one direction, we tested back to the open. It's kind of one of those. I think we had it this week. Maybe it was the 19th. I think it was actually. A lot of trading. I'm trying to think what I'm saying. On a lot of trading range days, you can usually buy X number of points away from the open because price will come back to the open. So, right here, open of the day is 95.50. Let's say you buy. You could not buy. See, look, price went exactly, I believe, 7 ticks lower, 95 to 89.50. So, it went 7 or 6 ticks lower, exactly. That a lot of traders try to buy that there. So where I'm getting at is, a lot of traders will they'll just say, okay, the open's 95.50, trading range open, I'm going to buy at 91.50, 4 points down, and then I'm going to put a stop down here. So what's more likely? We go up 4 points or we go down 4 points? Well, more likely is we test the open. So, anyways, just like today, and just like here, and just like here, it's reasonable to sell this high. If you did sell this high, it depends on what you're trying to do. So, let's say you don't get out and you're still short through this. Well, one thing. The first reversal down is probably going to fail. So, swing traders are long. Traders will hold through this and they're going to wait for a retest. So, if you quickly want out, that gives you two choices. If you're using stop, you can sell below here. I would not. It's a bull bar. It's a micro channel. Probably better to wait for a second entry. But notice if you did, price went exactly 1 tick lower. So you sell here, sell higher, below this bar on a stop. Average entry is right here, so you got out break even with just a loss of commission. Same thing up here. If you sold this high, you got out break even. Well, what if you didn't even do that? What if you just said, okay, I'll sell here and I'll sell more below here, maybe up here, maybe even I'll just sell out more after these two closes? Well, if you use the correct stop, it works. And you can notice, look what happened right here. We fell right to it. Even down here, this is a reasonable thing to do. So this is a reasonable buy. Buy somewhere up here, and you get 4 points, or test the open. Now, I'm going to draw this just as a kind of visual. So, after we tested up, it's kind of mission accomplished. We're back to the open of the day. So, that trade's kind of over with. Now, the issue with buying down here is the possibility of this. Some sort of double top. So if we break below, it's a failed breakout of it's a failed double bottom. All double tops are failed double bottoms. All double bottoms are, in essence, failed double tops. So, anyways, back to what I'm saying. I'm trying to load these. There's some charts I'm trying to load real quick. I'll Hope it'll work. So anyways, this is a classic situation in a trading range day, and that is we have a double top, double bottom, which is a trading range. You know, you're going to get a measured move one way or the other. And you have buyers down here, you get a low 1 short and then a low 2 short. You know, the issue is always what happens, you know, the probability favors the bulls. In other words, this low 2 should fail. However, the issue is sometimes it doesn't. And it never quite, you know, a lot of double bottoms and double tops. Double top, it's a low 2 short, low 1, low 2, or double top. Here's a double top. It's a low 1, low 2. They never go straight down, and that's what makes them difficult. You know, in other words, like today, they just drift down, and buyers are making money below bars, which makes it hard to swing. So let me, hey, dang it. Hang on, I'm going to have to pause this real quick and try to fix it. Alright, so I fixed it. So anyways, by the way, on a future note, whenever I kind of do the same thing as Al. I've saved up a lot of charts on my computer. Just a side note, on at least for TradeStation, I'm assuming with most, do not save the chart as is. Don't save it as that continuous contract for TradeStation at es.d. Change it as, you know, ESU, you know, 114.d, because what will happen is more times than not, they alter the price for whatever reason, you know, in the future they recalculate the price, I guess, and it changes all the stuff. You know, you get the text box moved over here, and it's kind of a pain to refix. So just a side note. So anyways, you know, this isn't exactly it, but it's sort of the same thing. Here we're at the bottom of a trading range, and we have a low 1 and a low 2 short. Low probability. Probably buyers below and more up. To me, that's kind of similar. In a way, it's similar with today. You know, today was a little different because we're possibly channeling down. You know, we couldn't get above this high. You know, basically 4 pushes up, 1, 2, breakout, 1, 2. So it's kind of like low 4 short. Think about it. It's a variant. On a smaller time frame, it's low 4. Get a low 1, pull back, low 2, bull breakout, pull back to a low 3, you know, bull breakout, pull back. So probability is probably a little better that we'll get more down, but still not. This wasn't likely. All right, here's another example. So we have here's the bottom of a trading range, you know, the lows of the past couple days. Here's a low 1 and a low 2. So we have a low 2 right here. Low probability short, but as you can see, you know, it is a possible, this could lead to some sort of double bottom. Excuse me. Could lead to some sort of, you know, it is a double top. We went up, you know, although we only went up once, technically, you have a low and a breakout. So if we break below any sort of double bottom, it is a double top. So with that said, low probability short below. Excuse me. Alright, I had to pause the recording for 5 minutes while I was making this, so I kind of forgot what I was saying. But here's the whole point. You know, trading range. Here, a little different because you have a spike, a decent bar 1, spike down, and a 2-legged pullback, and you also have trap traders, 325, 325. So price did not go above the one low, so it's a little more silent trading range. You can argue wedge, 3 pushes, first, second, third. Strong breakout. What does this tell you? This tells me, you know, look right here. You have trap by the closed bulls. So there's a lot of things going on here. You know, strong tight channel, so first slip should fail. You also have, and as it did, first slip failed. Now, another issue, sell to closed bears easily got out. So there's a few problems with here compared to today, and I'm just kind of real quick. I'm just looking at this 86.25 is its low. So this is kind of one of those. You have to understand that buying this low for a swing is tricky because stop placement. It's very similar today. Let's walk through today. And when I say buying, I just simply mean swing trading. You always have to be careful of stop placement. Because the reality is the stop goes probably all the way down here, and if you can't scale in, how do you manage that? It's just not that simple. So kind of had that today. Low 1, low 2, broke below, bulls not doing enough, bulls can't get a 1-point scalp, and but bulls are having a field day buying below bars. Even here, they buy this low, they scale in 2-3 points lower, make money. So on a day like today, how do you, and also on this day, well, it's not working. Anyways, how do you manage a day like today? Well, it's not easy. It's kind of tricky. The move down always looks like it's going to reverse, and that's kind of the point I was getting at here is it's the same with this. It always looks like it's trying to reverse, and before you know it, you get a measured move down. Maybe actually it's probably more from here. Somewhat reasonable. So it's hard to hold short, but if you look at a 15-minute chart, think about this perspective. Move down, pull back to a double top. 3 bars down, probably sellers above, so it's reasonable to sell this high. 3 bars down, probably sellers above. This didn't trigger. So, not a ton to really say about today. It's kind of a trending trading range day. In terms of this day, strong breakout. So we may get a breakout of a bull flag, which we did. Excuse me, breakout of a bear flag, where you can, trying to collect my thoughts here. Bear flag, so bear breakout, bear flag, broke above it. However, strong enough breakout, so first down will fail, probably more up. Strong breakout, probably the best of the bears will get a sideways. And notice here, there's a gap. So always have to think about this, called a failed double top. It's not really important what you call it. It's just a gap. We'll probably go higher. And then price started going sideways, but bears are making money on the way up. So I don't really have a lot of thoughts really left on a day like today. We came close to leg 1, leg 2. Probably got it. We actually did get it on the Globex. And you can see we went below 80. So, alright, that's pretty much all I got. We can look right here. So here is, to me, kind of the magical point, this low. Reason being is traders who buy somewhere down here will probably make money if their stop is somewhere down here. So I think we will, I don't know if we do it overnight, I think we will tomorrow get up to at least here, kind of like this. Alright, that's all the time I really have for today, so comment if you have any questions. Have a great evening.